Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me to discuss what DeFi is and where the potential for growth lies is Brian Norton, COO of MEW, my Ethereum wallet. Brian, it's great to have you with us. Welcome to Trade Talks.
Thank you. It's a pleasure being here. Thank you for having me.
You got it. And Brian, tell us this concept of DeFi, how it's different than traditional finance and how much US dollar value is already locked in.
Okay, so in broad terms, what DeFi is it stands for decentralized finance, and it's one of the use cases that we found for blockchain, where we're bringing digital assets and creating automated money markets, derivative markets, and putting them on the blockchain. So you're trading trustlessly with liquid assets that way. Currently, the total value locked in DeFi estimates around $10 billion to $11 billion. To put that in context, we were celebrating just in February of this year the first $1 billion locked in DeFi. So it's been quite a year thus far for us.
Yeah, it certainly has. I mean, digital asset adoption in general, as we're speaking today, Wednesday, October 21st, we had the announcement with PayPal accepting Bitcoin on its platform. So regardless of which currency you're looking at, that certainly is encouraging news for the industry. Now, we also understand this concept of an ICO. How is that different than DeFi?
So, to put it in simple terms, it's part of DeFi. The ICO was sort of the first iteration of what we could consider DeFi. It was sort of stage one, and ICOs were direct token sales. So it was people buying tokens as a way of funding early stage projects, mostly in blockchain, but sometimes we're just utilizing blockchain to fund those projects. And that was sort of the first big use case that brought people into blockchain outside of Bitcoin and to Ethereum in particular. ICOs pushed that forward. What we're seeing now is more of the next iteration, the expansion of these use cases. So it's not so much about funding projects directly, but rather in creating an actual fully fledged financial market that exists trustlessly on the blockchain.
Now, with Ether entering the realm, opening up a whole new set of applications, what's the big potential for DeFi?
I think that the big potential for DeFi currently is like I said, the ability to trade liquid assets digitally on the blockchain in a trustless manner. What I mean by trustless is meaning that there are few to no intermediaries between the user and their assets. So traders are really only encumbered by their own risk tolerance and their ability to sort of read the signs that are playing out on the blockchain in real time.
So let's talk about this on an even higher level. When we talk about applications, what's the difference between apps we use daily, like social media as an example, versus decentralized apps?
So this is kind of an open debate because decentralization sort of works on a spectrum. Centralized being like the products and applications that we use have one owner, they have one product team, and if that product team goes away and that application shuts down, you can't use it anymore. Essentially, what decentralized applications allow you to do is own your own information and have custody of your own assets. It's really an exercise in self-custody. So taking MEW as an example, my Ether wallet is built by a team. We design the interface. We create our own products, and users interact with them in the way that suits them the best, that suits the use cases that they want to engage with. But if they decide that our products no longer suit their needs, or they'd like to use their assets on another application, they have control of those keys, and they can take those and use those keys on any other sort of decentralized application that is out there. So it really allows users to be the security of knowing that their assets are secured on the blockchain and not necessarily by one specific company or one specific application.
And that's a huge distinction. It almost reminds me when I'm talking years back, if you had your own cell phone number, and if you wanted to move to a different carrier, you couldn't carry that with you. But now it opens up the door where it doesn't, it's carrier agnostic. Your number goes from carrier to carrier. So I almost think of it in terms like that, but I think that really is a big distinction where you own it and not necessarily the app owning your information. And I think that's really important to understand. So when we think about DeFi over the next 5 years, and as we've seen with many other technologies, COVID-19 accelerated many of those trends that were in place. In many cases, 3 to 5 to even 10 years. Did the same happen for DeFi, and where do you see it in the next 5 years?
Oh, it absolutely happened with DeFi. Like I mentioned, just in February of this year, we were celebrating $1 billion in total value locked in DeFi applications. That's exploded 10x within just 9 months. So I think that that COVID, in a certain sense, and the shutdowns did have people migrating and experimenting with these different types of assets. Also, they just had the time to learn, frankly, because it's not necessarily intuitive conceptually. But when new users come into this space, they actually find that it's actually not as difficult or as opaque as they believe. So I believe that as we start seeing these movements towards mass adoption, people coming into the space, regulators are going to start responding, like what we saw in New York today with the PayPal decision. So it depends a lot upon the rate of adoption going in, which we are seeing trend up, and the willingness of regulators to sort of start creating a roadmap for companies who want to build on decentralized applications like Ethereum. I think that in the next couple of years, we could see an explosion in different ways by which companies are funded through what are called DAOs, decentralized autonomous organizations, being traded, where we can see automated vesting schedules for equities, for people purchasing equity in early stage startups. So there's really a lot of applications that are only just beginning to be explored today.
Yeah, Brian, if you think about it, every other part of our economy, virtually all sectors are becoming digitized. So almost why not this? And if you even want to go further down the rabbit hole, if everyone's so concerned about voting security, think about the blockchain and some of these other technologies that can help alleviate that. If we're seeing it practically applied to so many other areas of the economy, I mean, that could certainly be a use case at some point as well.
Absolutely. I mean, it's something that people are experimenting with now. Frankly, we're not quite there yet, but the core functionality is there, and it's just a matter of optimizing it so that people understand it, and that's really comes down to education. Applications like my Ether wallet and other decentralized applications, aside from making user-friendly tools, are really focused on educating new users coming into the space. Okay, what are these things? What can you use it for? And what could you be doing today that will have effects on how you live your life 5, 10 years from now? It's really it's really about educating people and getting them to understand how this technology, just like the internet did, is going to eventually work its way into the fabric of daily life.
Right, Brian, exactly why we appreciate you spending time with us on Trade Talks. Thanks so much for joining.
Thank you for having me.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.